This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. A pivotal week for central banks kicks off with euro area PMIs that point to economic malaise. The Fed and ECB are both expected to hike, while yield curve control will be the focus for the BOJ. Earnings season ramps up. Alphabet, Meta, Intel could shed more light on how AI is upending the tech industry, while Coca-Cola, McDonald's, Ford, and P&G will provide a read on the health of the consumer. And in Spain, the IBEX drops after an inconclusive election. Prime Minister Pedro Sanchez denies his right-wing opponents a majority in parliament. We're live in Madrid with the latest. Happy Monday. Welcome to Bloomberg Surveillance. This is the early edition. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, I was ready to say what a busy week it was about to be with earnings with central banks, but it's already started with that really, really bad European data.
Yeah, and I think the ripple effects of that are going to be crucial, especially when you see stateside the story of what you're seeing in Europe and what that really means, not just for the ECB, the BOE, but potentially for the Federal Reserve as well. Remember, it is a global story that we are seeing and moving the bond market. We'll get to that in a moment, Dani. Right now, some green on the screen across the board. S&P futures higher by about 0.2%, 45.72 for our radio audience on those contracts. What's important to keep in mind is, again, no major conviction to the upside. But if you look at what is actually moving underneath the hood, it is a lot of those tech names that are pushing it higher. Take a look at the bond market, though, and this is where that data stuff comes in handy. What Dani was just mentioning, that 10-year yield coming down a little bit to the tune of about 2 basis points. Look, 2 basis points doesn't sound like that much for the 10-year yield, but it did move by that margin just on the European data alone. So 381 on that note as well. And remember, when we look at yields coming down, we think the dollar is going to follow, and that is generally true, especially given what you are seeing across the Atlantic. But I want to bring your attention to what we're seeing across the Pacific as well. Dollar yuan at about 721, we'll call it, strength by about 0.3%. Remember the last time that we had this pair cross at 7.2 level, we were really looking at China stepping up some of that stimulus, stepping up some of those concerns about really the slowdown in the Chinese property market and how much they're going to intervene in that story. So keep an eye on that as we talk about the Chinese growth story. And of course, in that same vein, Bloomberg commodities are always going to be in focus. Remember, gold, copper, oil, they are all down on the day, but agriculture leaving the index higher to the tune of about 0.4%, Dani.
Kriti, so much going on here in Europe. Let me walk you through the board because, again, it was that data. It was a big surprise, and it's really unfortunate timing for FX traders considering the latest CFTC data shows a net bearish positioning on the dollar of currencies, including the pound, including the euro, to the biggest amount on record. If you're holding the dollar versus the euro, if you're shorting this pair, it was a good day for you. But if you've gone long for the euro, you are getting smoked today because we saw so much euro area PMI disappoint. We're going to get into that in just a bit. In Germany, though, it was its worst manufacturing PMI reading since COVID. Hence the reaction we've gotten. Euro weakens by about 0.5%. It's now trading just under 111. UK two-year yield, we had some UK data. Disappointed not by as much, but it's following the trend of a big rally in European bonds. So those yields come in by about 11 basis points. We've backed off the peak of a 5.8% peak rate for the BOE. We're now at 5.7. Euro area stocks, somehow among all of that, they're gaining a lot of different earnings stories impacting things here. But the real disappointment, and again, Kriti, I know we'll get into this in a moment, so I won't steal Maria today as thunder, but Madrid's IBEX falling about 0.7%.
Yeah, the geopolitics, the monetary policy, a lot to digest. But I think the trade this morning, to your point, Dani, really centered around that euro area PMI data. Let's put that into some perspective here. I want to show you a chart for our TV audience. Our radio audience, stick with me. Basically shows that PMIs are showing some pretty widespread contraction on the continent. For our radio audience, you're basically seeing the line go down, down, down for the likes of UK, Germany, France, and even the United States as well. Germany, France, and the UK kicking off the third quarter with the contractions, mostly in their private sector economies. Sustained weakness in the manufacturing sector as well, and that's spilling over to the services part of the economy as well. I want to bring in Bloomberg macro strategist Simon White, specifically to talk about what the read-through might be on an ECB that's dealing with a lot of different cross currents.
Yeah, I mean, they were pretty dreadful PMIs. I think earlier on in the year we saw this little bump in PMIs, and I think that created this bit of kind of ephemeral optimism, which was maybe a little bit too kind of premature. But really, yeah, I mean, look, the ECB is they're going to hike this week, almost certainly. But after that, I think it's going to be data dependent, and things could change enough by September, and they could suddenly, they could revise basically where they are, and we could be at the end of the hiking cycle for now. I think they'll have to maintain the hawkish language, though. Obviously, they're going to try and aim for a higher for longer kind of mantra, the same thing as the Fed. But really, they will get to the point where they're realizing that the economy is not quite as strong as they would like.
I mean, on the other side of things, Simon, I mentioned this, that at the moment, there's a record amount of bearish dollar bets at the moment in this market. And we're also going to not just get the ECB, but we're going to get the Fed, we're going to get the BOJ. Does the market look a little bit too one-sided heading into all that, especially now that we have this European data in hand?
Yeah, I mean, I think for Europe, potentially. I think the Fed, obviously, they're probably going to go as well. I think if they had not sort of promised so much that they were definitely going to go, they might not. CPI now is, at the moment, very soft in the US. I think later on that'll change, but that's a different story. But they're going to do their 25. You've seen the jobs market, just beginning to slow down, claims, things like that. So, I think, it get to the point where that's probably the last hike for the Fed. And for the ECB, as I say, they could get to September. They're going to be data dependent. The Bank of England, I know that's not this week, but they're the ones that I think are going to end up over tightening. They have quite a few hikes already priced in, but the economy is, I think, less resilient in the UK than it is in the other areas.
So, Simon, I got some breaking headlines for you that I want you to digest here from the BOJ. The BOJ is said to mull big increase in 2023 inflation outlook. They're said to mull raising the full-year CPI forecast to around 2.5%. To me, that's inflation above their target. If they are thinking this, do you think that means we might be in for a change on Friday?
You can never predict what the BOJ is going to do. At the minute, it sounds like they want to run things a bit hot. It's been so long that they have not had inflation for. And I think they don't want to prematurely tighten and then maybe scupper any progress that's been made. They're seeing wage increases as well. So things are moving in the right direction. I think a lot of people obviously think they're potentially threatening in the longer term financial stability. But look, I think if they are going to tweak it, yes, again, the BOJ can do anything. They can always surprise. So I'm not going to put myself out there and say that it's going to be this week, but I think they will do soon. Yeah.
Probably a safe decision, Simon. Of course, on those headlines, you're seeing dollar yen tick lower as well. 141.39 on that currency pair. Bloomberg Simon White hitting the BOJ, ECB, Federal Reserve all in one. What can't he do? We go, of course, from Tokyo to Madrid. Turning to the Spanish election, Prime Minister Pedro Sanchez lives to fight another day, though Spain looks on course for gridlock after inconclusive results left parties on both ends of the spectrum without a clear path to forge a government. Joining us now live from the ground in Madrid is Bloomberg's European correspondent Maria Tadeo. Maria, what will the Conservatives make of this result?
Well, it's a bittersweet victory for the Conservatives because we should make it clear and stress this. They won the election. They won the most seats and the most votes. But the way the Spanish parliamentary system works, that is not enough. You need a majority. You need a working majority in the lower house that you see right here behind me. And the numbers simply are not there for the Conservatives. Even if they were to go into a coalition with Vox. Remember, some will say this is a far right. Vox, what they say is that they are simply, quote, Spanish patriots. That would still not be enough. And that is a window of opportunity potentially for the Socialist Party. They came in second, but yesterday almost celebrated as if they had won the election. At this point, the crucial question is who will be the next Spanish Prime Minister? The reality is we don't know. Will there be a next Spanish Prime Minister out of this election? That is also unclear. And potentially what we see or will see are weeks, months of political deadlock and maybe even a new election.
What happens in the meantime, Maria, if it is this tight balancing act like you're describing between the different blocs?
Yeah, especially if they both try and fail. Again, you're into months of political paralysis and a new election. Now, some strategists suggest that this kind of paralysis would be bad for the economy, although I should note a lot of the technical work that gets done between Madrid and Brussels is on a technical level. These are not politicians that handle files like this. But of course, the markets did not like or will not like months of uncertainty. The question and the one issue, of course, that I would really stress is that fundamentally both the Conservatives and the Socialists face the same difficulty, and that is the company they keep. It is clear now that for a number of Spanish voters, the idea of a government that includes what they perceive as a far-right party will get them out on the streets and will get them out to vote against that. For the Socialists, however, if they were to form another government, they would depend on Catalan nationalists, and particularly of a man who I'm sure you remember, Puigdemont, who declared independence from Spain in 2017 for 30 seconds, but nonetheless did it, and then fled the country in the back of a car. With friends like this, of course, it's very difficult to form a government.
Yeah, Maria, I remember that moment quite vividly. I think I met you a couple months after that had happened. Maria Tadeo in Madrid covering all of the developments there in Spain. We go from European politics turning to the tech sector. Twitter says goodbye to its signature blue bird logo as Elon Musk replaces it with a stylized X, calling it part of a broader overhaul of the company. Joining us now, Bloomberg's Aggie Cantrell all over it. Aggie, is this just another kind of Elon Musk branding scheme, or is there more to it here?
Yes, so first of all, this is really a return to roots for Elon Musk. He has a bit of an obsession with the letter X, and his company, this payments company in the 90s was called X.com. Since then, we've seen SpaceX and the Model X at Tesla. And so this was part of a broader idea that he had in the first place when he first announced the acquisition of Twitter, which was that he wanted to create an everything app, sort of a WeChat analog. And that was alluded to as well and elaborated in these recent tweets, and it was elaborated on by the current CEO, Linda Yasarino, who said in a series of tweets earlier that this was going to be integrating things like posts, audio, video, and also payments. So it is about building out this broader app. So there does seem to be a bigger vision here. But really right now, when you type in X.com, as I did earlier in the Bloomberg office in Berlin, all you do is get redirected to the Twitter platform. So right now it feels like it is this immediate rebrand, and then we'll see what happens from there.
Yeah, we also need to figure out if it's still going to be called to tweet, because to X makes is an absolute nonsense phrase. It makes no sense. Aggie, for those tech companies that are still public, it's another really big week. We have Microsoft and Alphabet just in one day tomorrow. I'm curious what the AI race will look like between the tech giants. What are we expecting to hear from them?
Yes, so essentially we heard a lot about AI the last time that these companies reported this year. From Meta, from Alphabet, and from Microsoft, who are all reporting this week, AI is going to be a core focus. And I think what analysts are going to be looking at now is, okay, you've all committed to this, you want to be developing in this space. We need to understand what that actually looks like, what that means in terms of growth going forward, in terms of investment, because also this shift to AI isn't a zero-sum game for these companies. It costs a lot of money. It costs a lot of extra effort, extra manpower, and a huge amount of processing power in order to shift a lot of these services that they're providing over to AI and in order to develop new ones. So this is something that they're all committed to, and it's something that analysts were very keen to see in the last round, but I think in the last earnings reports. But I think this time around, people will want to know what that really looks like.
All right, Aggie, thank you very much. That is Bloomberg's Aggie Cantrell. Again, a crazy busy week. Coming up, we're going to take a step back and talk about the Wall Street underdogs. They're on a hiring spree for top talent as deal-making slump forces big banks to downsize. We're going to have more on today's Big Take next. And from banking deals to tech deals, we'll discuss digital mergers and regulation with the former UK Competition and Markets Authority CEO later this hour. Also, we're going to discuss the PMI data out of Europe, a potential upgrade from the BOJ on inflation forecast, and news coming from China that the Politburo will be holding their meeting on Monday. We have so much to discuss with Rafaella Tenconi, Chief Economist at ADA Economics. This is Bloomberg. Welcome back to Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Kriti Gupta is in New York. Now, today's Big Take takes an exclusive look inside the turnover at investment banking giants as M&A deals slump. Let's bring in Jan-Henrik Forster, senior reporter for investment banking. I mean, it's been a strange time for investment banking in general, Jan. So taking a step back, this turnover, why is it so bad right now? Why is there so much of it?
Well, certainly there are a lot of cuts, right? Goldman, Morgan Stanley, they are all going through the biggest rounds they actually ever seen. And then obviously Credit Suisse disappeared, which was a big investment bank. And the observation we made here is that there's a lot of turnover. I call it the great rotation of bankers moving around places. And this kind of led to a situation where smaller banks or banks who are rebuilding or boutique banks, they are hiring all these people, paying top dollar. That's certainly one element. And you kind of see this situation where, basically people move around and the whole kind of landscape of investment banking is shaking up a little bit. Now, the question is, what does it mean for those who are catching up?
Well, tell us just that. In terms of the kind of broader banking sector, is this a trend that's really going to stick?
But there is a lot of uncertainty, right? There's still a debate about where terminal rates will end, and M&A has slowed down completely. So there are no fees. Private equity has gone in retreat mode, right? They're, both on the buy side and the sell side. And banks are cutting, right? So I guess if somebody like Goldman makes a view, volumes are not coming back, so we are cutting, you can imagine that this is might be going on for another year or two. Now, the question is, guys like Deutsche Bank or Santander, can they really make a difference here by hiring a lot of people now and catch up with kind of the big Wall Street guys? And that's, it might be either a costly error or they get it right, and we will see different type of league tables in the future.
I mean, I'm sure a lot of PE hope it's going to come back and those banks will get some business. Jan-Henrik, thank you so much for joining us as always. That's Bloomberg's Jan-Henrik Forster. All right, some breaking lines to share with you coming out of China. The China Politburo saying that they will meet on Monday, also saying that they vow to optimize and adjust property policies. They also say that they're going to effectively present and resolve debt risks. They're also vowing to drive platform firms' healthy developments. Again, Kriti, we're all waiting for that Politburo meeting to see if they announce any type of large-scale help for the economy.
Yeah, it's interesting that's coming at a time when even over the weekend, for example, Henry Kissinger was kind of tapped as being someone who could broker some of those deals. But what's interesting to me is kind of what the Chinese Politburo puts their emphasis on. They're saying, look, we're going to try to boost car and electronic products consumption, really speaking to the Chinese consumer and the strength there. They're also saying we're going to try to enliven the capital market and boost investor confidence. Dani, we know this has been an issue given the recent outflows out of China.
Yeah, and we also learned over the weekend a great scoop from the team that China has been meeting with international funds trying to court more investment. But again, another scoop from the team that China did not plan on large-scale help, on any sort of large-scale programs that come in. So again, the Politburo, though, vowing to optimize and adjust property policies. A little bit of strength now coming in from the yuan. It's still falling, but paring some of those losses. All right, coming up, Kriti and I are going to turn our attention back to this earnings season. Goldman's David Kostin calling for recent S&P 500 valuation expansion, quote, reasonable despite higher rates. We're going to have more on that next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Burger in London. Kriti Gupta is in New York. One call from Wall Street that caught our eye this morning. I should be more specific. Kriti found this one, shared it with the team, so kudos go to her. It's Goldman's David Kostin. He says, quote, we believe recent S&P 500 valuation expansion, despite higher rates, is reasonable considering the longer-term relationship between rates and equities, the improvement in expected growth, and the high market concentration in stocks benefiting from AI optimism. He then goes on to say, we believe risks to valuation are tilted to the upside if the multiples of laggards catch up or yields fall. Kriti, I think if you had told me after 500 basis points of increases from the Fed, if we were going to stare down more multiple increases, we're going to stare down the pain trade being equities up, I'm going to be honest, I probably would not have believed you.
Yeah, and I think it's a pretty contrarian call coming out of Goldman Sachs in particular. We know that a lot of the major Wall Street banks are still saying, look, there may be more kind of green on screen ahead for the stock market, but when you look at valuations, they're still not really there. So David Costa saying, well, maybe they're reasonable. That is a big deal, but notice what he says. He says it's not on the fundamentals, it's on the yield story. So more of a cross-asset take rather than, yes, the AI drive is actually sustainable.
Yeah, and to be fair, we did see that big sell-off in tech last week, spooked by some of the earnings. But underneath the surface, we have been witnessing this rotation of the leadership broadening out. It's what Bank of America has called for, the fact that the equity rally can sustain itself, because it's not just going to be big tech, Kriti, that carries us.
Yeah, I mean, this is something that tech broadly talks about, right? That it starts with the tech space, and then fundamentally as well, tech also hits every part of the economy. So certainly something we're going to be watching, especially this week when we're dealing with earnings, plus some of the central banks.
Ooh, it's almost like you knew where we were going next, Kriti. Let's recap some of the breaking news we've gotten, because we have gotten so much, and it's only a Monday. Coming from China, Kriti, that the Politburo has vowed to optimize, adjust property policies, and that they're going to adopt a plan to resolve local government debt risks, is of course ahead of their Politburo meeting on Friday, where we'll get a readout on the following Monday.
Yeah, it's something pretty similar to what we've been hearing. We know that China's trying to step in for their slowing economy. They're trying to boost a little bit more of that consumption. But on those headlines alone, to your point, Dani, you are seeing some moves in the dollar yuan. 7.19 is where we're at there.
Yep, and of course there's also the BOJ saying that there might be, according to people familiar, revising up their inflation outlook to above 2%. Still some doubts as to whether that will be sustained, so it doesn't necessarily mean a change on Friday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A pivotal week for central banks kicks off with euro area PMIs that point to economic malaise. The Fed and ECB are both expected to hide, while yield curve control will, of course, be in focus for the BOJ. We just got those headlines. We will dive into them throughout the rest of the show. Plus, earnings season ramps up. Alphabet, Meta, and Intel could shed more light on how AI is upending the tech industry. Coca-Cola, McDonald's, Ford, and P&G also on the agenda. We're going to get a read on the health of the consumer from those companies as well. And over in Spain, Prime Minister Pedro Sanchez denies his right-wing opponents a majority in parliament. The IBEX drops as the country faces political gridlock yet again. I'm Kriti Gupta in New York with Dani Berger in London. Dani, you know, it was pretty clear that central banks were going to be in the focus, but just in the last 30 minutes, just double emphasizing how important they are this week.
I mean, what is going on, Kriti? It is Monday. It is the Monday of a summer. I thought it was supposed to be a little bit easier. I thought everyone was on a beach somewhere, but we've had breaking headline after breaking headline. The big ones, the big market movers really came over the past 2 hours with the European PMI data, basically disappointing across the board. That brought the euro back in. Any strength disappeared. A lot of the bets are on the other side of things. A lot of bets right now are stacking up on dollar weakness. That's not how it's playing out today. So the euro isn't able to hold above 110. 2-year yield in the UK, that gets a bid, as does all of European debt, again, off the back of that poor reading on PMIs. Is the ECB really going to be able to be as aggressive and commit to that higher for longer narrative if we're getting data of the likes we did today? So UK 2-year yield comes in 9 basis points. We back off of the peak terminal rate of 5.8%, something like 5.7 now. European equities, those are able to fight any downtrend. But the thing that is disappointing, the thing that is underperforming and dragging them down is the IBEX, the Iberian Peninsula, down about 0.7%. Kriti, you mentioned it, off the back of Spanish elections, no clear outcome. And JP Morgan had been saying before the results that no outcome would be the worst case scenario for equities. So there you have it, the one source spot in this European session, Kriti.
Yeah, I would say that green on screen you're seeing translating a little bit to the U.S. session, though. Of course, the Spanish index excluded. The futures higher by about 0.2%. We're looking at 45.75 on the index there. A little bit of tech outperformance already in play in the pre-market session. But look, it is all about the bond and FX market in these last 30 minutes. The 10-year yield, 3.81, we'll call it, down about 2 basis points in the pre-market session. That initial move came off of the PMIs that you got over in Europe. So you did see a little bit of a read-through into the U.S. market. Now, as you see that move, you would think that the dollar would weaken, and it really hasn't until you saw new headlines coming out from the BOJ and the politburo over in China as well. I want to show you the Chinese reaction in particular, because the dollar yuan about 30 minutes ago was trading at about 721. Essentially this idea that you were going to see continued weakness in China. So that was significant. It has since paired that move to below that key 7.2 level, 719 there, stronger to the greenback by about 0.1%. Of course, we're going to dive into those headlines in just a few moments. At the same time, getting headlines from the BOJ really revisiting some of their inflation forecasts. But if you broaden it out, is it really going to be that big of a change long term? We're going to dive into that as well, moving the markets all together, specifically when it comes to commodity space. The Bloomberg Commodity Index originally moving higher off the agricultural moves. Now you have gold, copper, oil, all higher simply because of those Chinese headlines. The Bloomberg Commodity Index higher by 0.9%. Dani.
What an exciting day to be a macro trader, Kriti, with all those headlines you were commenting on and the European economic story. I want to show you this chart. Kriti brought it up earlier, but it's so good we had to do it again. For our radio listening audience, we're looking at PMIs, manufacturing PMIs across Europe. They've all been falling really steadily. If you notice one line on top, it is the U.S. One line on the bottom, the blue line, it's Germany. Manufacturing in Germany came in at 38.8. The estimate was for 41. This is the first time Germany PMIs for manufacturing have come in below 40 since COVID, that have come in below 40 since the great financial crisis. This was some ugly data. Joining us now is Rafaella Tenconi, founder and chief economist at ADA Economics. Rafaella, just starting pure and simple with the data, how ugly is it for Europe?
Good morning.
Good morning.
It's not that ugly as it looks. It's a continuation of what we've seen since March and April. Manufacturing sector began to stutter there. When you look at slightly different survey data, you will see that order book is still very high. Financial stress on companies is still very small. Biggest bottleneck is still labor shortage, actually. So the good side for the economy is that it's bringing lower inflation pressures. So I think what you're looking at is just growth slightly above zero, but under 1%. It's not a recession. It's likely to continue another 2, maybe 3 quarters, with the beginning of 2024 being really the pivot time on the upside, I think.
Rafaella, this is making me feel better because I was ready to go all doom and gloom, and you've put me in my place here. Okay, does that mean anything different for the ECB then? Can they continue to hike? Can they continue to go lower, higher for longer? If it is, okay, the trend is not great, but it's not awful.
So my personal opinion is that in reality, the ECB should have probably stopped hiking a while ago. So monetary conditions are already a bit too tight. But in reality, the central bank and the council is very anxious about inflation, and therefore they will hike this month, probably hike again in September. And maybe you need to wait until the end of the year before they really comfortably signal a pause. We think the direction for rates is still for a cut next year of 100 basis points. So your long-term new level is 350. But in the near term, it's true. Eurozone inflation is still about 3% next year.
Rafaella, the Eurozone story is so interesting because one of the dynamics we've really seen in this kind of last 2 or 3 years post-COVID has been this divergence in monetary policy with all of the major central banks around the world. I think the ECB is the best poster child of that right now. But on the other end of the spectrum sits the BOJ. Now, I know you don't necessarily focus on the BOJ, but I want to run these headlines by you. In the last 30 minutes or so, we got news that they're set to mull a big increase in the 2023 inflation outlook. That is a big deal coming from Japan, which has kind of been stuck in this deflationary cycle for decades, I would argue. Does that have any meaningful read-through into kind of the way the Federal Reserve, the ECB, or arguably the BOE thinks?
So, first of all, I would say Japan is just lagging everyone, but is experiencing the same thing as every other country. There is a tightness of labor that is persistent. There is a structural pro-inflationary trend. And there's just a cycle right now that is keeping inflation in the Eurozone and in the US on a downward trend. So I think eventually the BOJ has to really tighten monetary policy, but because they're behind everybody else, it's probably a 2024 story more than this year. And in terms of read-through, what I would say is the key risk is that the ECB and the Fed over-tighten if they really keep rates high next year, especially because you have the Japanese central bank, the BOV, and the Swiss central bank all still on a tightening base. So the global monetary conditions will be very tight by then.
You know, Rafaella, it's interesting that you say it's a 2024 story. Only a couple months away, I might add. It's insane that we're almost close to August and September, 5 months away. What's important to keep in mind, though, is the talking about whether or not inflation is going to be, dare I say it, transitory or not. And it took a very long time for the Federal Reserve to get on board. But here's the BOJ saying the exact same thing. They're saying they have doubts that this upward price momentum will persist. Rafaella, talk to us about the stickiness of this inflation. We're talking about it coming down, but what are the odds it sticks around or perhaps ticks higher around the world?
So inflation is highly cyclical and very influenced by food and energy. So right now in Europe and in the US, it is on a downward trend. It will still be low next year. But if the inertia, you will see it in 2025, where in my view, it's practically impossible, for example, that Eurozone inflation will be at 2% in 2025. It will definitely be 3% or higher. Because by then, the cycle will have turned, you will have more consumption back, you will still have the tight labor market, and you'll have the digitalization inflationary effect that will reveal itself again. So we are in an inflationary decade. There is no escaping that.
Well, one of the really fascinating things about your work, Rafaella, is how income inequality plays into the monetary outlook. How does it change the game for central bankers if we have a wider divide between the haves and the have-nots?
So there are two near-term aspects. The first one, the US has better data than the EU, but the US can tell you that already the top 20% of the income distribution has more cash at hand than the bottom 80%. And their demand is more inelastic. So especially because now we have more machine learning driving pricing strategies, it makes services inflation, for example, a lot stickier. Okay, it doesn't erase the cycle, but it affects the inertia and the trajectory. So there is, first of all, a problem there. The second issue is that when the income distribution becomes so polarized, it practically, the mean doesn't represent anything. You need to look at the two sides and then adjust both sides. So for central bank, it means rethinking how they do policy. And for 2024, the issue is everybody votes.
Yes.
So the top bottom is going to express this malaise. And so this is really why we don't believe that higher for longer is really credible in 2024, because you will have inflation that is lower, you'll have the economy sub-potential, and you will have elections. Central banks have a practical independence and institutional independence, but they live within society.
Of course.
So I think that is important for them.
That is so fascinating, because also you can't have one central bank policy for the top 20% and a different policy for others. So if transmission then is changed because of that, does it mean already that they've done too much at this point? Of what we're witnessing, again, is the inelastic nature of the top earners, of the top income quartile?
Well, they've done too much for a vast majority in the number, but they've not done enough in the wealth holding. So this is the practical issue. I think it improves significantly if you can provide more transparency on what is going on and if you can provide more guidance. So that's why we say 350 is probably the best policy rate that strikes a balance, especially with all of these transitions that you're doing. You know, I mean, energy transition, green transition, digital transition, really complicated. You know, the private sector, top and bottom, needs to handle it. And if you have a central bank that just like hides like that, it's not helping.
Certainly not.
It's certainly something we're going to be keeping our eye on. Rafaella Tenconi, ahead of a crucial central banks week over of ADA Economics. We thank you, as always, for joining the program. So you've got central banks on the agenda. You also have that major earnings story, specifically in some of the big tech names, also dealing with antitrust issues. We're going to speak to Andrea Coscelli, the former UK Competition and Markets Authority CEO, next. Stick with us. This is Bloomberg.
I don't think it's the case that there's a particular approach on Microsoft and a different approach on other deals. There are many, many transactions where we take a very similar approach to the EC and to the US. And indeed, of course, it's important to remember that we had very much the same concerns about the impact of the transaction as the European Commission did.
Sarah Cardell there, the current chief executive of the UK's Competition and Markets Authority, speaking with us last Friday on essentially the hurdles towards passing this Microsoft Activision deal in the UK. Joining us now is Andrea Coscelli, her predecessor, the former CEO of the UK CMA. He's now a partner and head of Europe over at Keystone. Of course, they represent the firm, represent Microsoft in the Activision takeover with the UK. So, Andrea, a lot to digest in that deal space. Of course, we know you can't comment on that specifically, just given your conflict of interest. Well, let's talk about it broadly. One of the criticisms that the UK is dealing with right now is that when it comes to deal making, they are often the odd man out relative to their peers in the US and Europe. How long do you think that can sustain? How successful can the CMA be if they are the holdout in the regulatory scrutiny of the world?
Yeah, I mean, I don't think it is true to characterize the CMA as being substantially in a different place from other agencies. I mean, I think the vast majority of deals, the CMA ends up in the same place as the EC and the US agencies. And generally, I would say the US agencies and the CMA have been in a very similar place in a lot of the recent deals. Now, obviously, there have been instances like the Microsoft case now where the courts in the US have ended up in a different place, but that's not where the agencies are. And also, I think if you look at the draft merger guidelines that the US agencies published last week, again, there is a lot of similarity with some of the positions the CMA have taken over time and the CMA merger guidelines in 2021.
Well, talk to us then about kind of the way it differs from the European Commission in particular. We know, for example, if you look at the deal kind of book from the last couple of years, Broadcom, VMware, Amazon, iRobot, Adobe, Figma, these are deals and approaches that the European Commission and the CMA have actually diverged on. Andrea, talk to us about the legal mindset here. Why is there that divergence in thinking?
Yeah, again, I think these are some examples. There have been a number of other cases where the EC and the CMA have been in the same place. I think one of the key differences is the approach to remedies. So there have been some instances where the European Commission and the CMA have both concluded there were problems with particular transactions. And the CMA has found it harder to accept some of the remedies proposed by the parties. So that's been the example with Microsoft Activision. And there was a similar example last year with Cargotec Cranes. On the other hand, there have been cases like Broadcom VMware or Amazon iRobot, where essentially the CMA has cleared the transactions in a or provisionally cleared, like in the case of Broadcom, in situations where the European Commission has found problems and either is still investigating or in the case of Broadcom has accepted some remedies.
And, when we spoke to the CMA, Kriti and I, on Friday, she was very clear in saying that, look, we're separate from politics. But there has been criticism, Jeremy Hunt among them, saying that the CMA needs to understand its role in promoting economic growth. Andrea, what would that actually look like if the CMA were to adjust policies for that? Is there even a way to do that?
Well, I mean, the CMA, he's trying to promote economic growth. So in many ways, I think the CMA would disagree with some of these statements. I mean, markets where there are monopolies or where there's significant market powers are not markets where you get economic growth. And more generally, there are lots of factors affecting economic growth, and merger control is only one of those. So I think this has been an instance where, some of the political interventions have focused on some of the broad political pieces post-Brexit in the economy. And I think merger control is really only a small part of it.
Another thing, again, and you know this obviously very well with your time at the CMA, is just if you look at, again, I know you can't comment on the deal specifically, and you're among them, the firepower behind Microsoft, the amazing staff there on lawyers, and CMA, I mean, it is a small staff. If I can take you back to those days, what does it mean to be trying to handle this immense caseload, this global caseload, again, when resources are kind of limited?
Yeah, so that's clearly an issue for every agency, for CMA among them. I mean, I think the complexity in some of these cases had now reached a stage where it is quite hard for the agencies. I mean, obviously, the agencies are, properly staffed and really focused on the priority cases, but clearly there is an imbalance of resources. And in many ways, I think it's quite interesting, again, going back to the draft merger guidelines last week, the US agencies are essentially trying to bring in some presumptions. And that really has to do with priorities and resources, because essentially, I think what the agencies are saying is, there are some deals that are obviously problematic, and we should be able to challenge them without spending, 15, 16 months looking at it with very large teams. That's the only way we can then devote those type of resources to more complicated deals like, let's say, Microsoft Activision. And so I think that's clearly a very important element for merger control.
Well, Andrea, let's dive into another one of the major deals, that $20 billion deal from Adobe and Figma, two companies that have already worked so closely together. One of the criticisms, specifically from the CMA, is that this is a perfect example of vertical integration that would threaten that innovation, that economic growth that you were just talking about. Your take on the Adobe Figma deal, what is a potential remedy for the CMA?
Yeah, I mean, I think that's a deal which has all the kind of hallmarks of what agencies worry about at the moment. So it's an acquisition for a very large amount of money, a very large multiple, and at a valuation that is significantly higher than the most recent private valuation before the acquisition. So it is unsurprising that there is a very detailed scrutiny of this transaction. It's now at phase 2 in the UK. It's currently being investigated by the EC, and the DOJ is looking at it. So, it's difficult to comment from the outside. I mean, it's clearly a complex deal, and clearly there is a lot of work going on by the agencies. Whether there are possible remedies if the agencies find a problem, I don't know. It's difficult to speculate from the outside. But again, the position of the US agencies and the CMA is that they don't really like this type of behavioral remedies in complex sort of dynamic deals like this one. So I don't think that has changed. At the same time, obviously, the agencies adjust their risk appetite as cases play out in the courts. And so I think Adobe Figma is a very important data point for anyone who looks at global merger control in terms of what's going to happen in the coming months.
Yeah, and perhaps setting the tone for some of the other tech deals that are on both the CMA and the European Commission's docket. Andrea Coscelli, a partner at Keystone, of course, a former CEO of the CMA. We thank you, as always, for joining the program. Coming up, a look at some of the market-moving events to watch throughout this week. We go macro, we go micro. Stick with us. This is Bloomberg.
Now look at what is ahead on this very busy week. We're going to get U.S. PMIs, 9:45 a.m. Eastern time today. Then big tech earnings, Alphabet and Microsoft report on Tuesday. Then 3 rate decisions in 3 days. Fed on Wednesday, ECB and on Thursday. And then rounding out the week, Kriti, BOJ on Friday.
A lot to digest. And of course, you mentioned those tech earnings. Let's go from the macro to the micro, because already you're seeing some movement in the media space. Of course, coming off of the heels of Barbie and Oppenheimer's big kind of weekend debut. We talked about this last week about what order we would go see it in. We'll leave that conversation for off the air. But right now, you are seeing a big move right now in the likes of AMC Entertainment, higher by 60%. Remember, some of that has to do with the court ruling over the weekend from their Ape shares as well, taking a hit. Warner Brothers Discovery and Mattel also higher by 1% this morning. Dani.
Yeah, look, I'm going to be honest. I didn't do it, Kriti. I said I would. I didn't see Barbie or Oppenheimer. So I'm going to leave here and make up for my sins. Maybe try to sneak out to the movie theater. All right, that's it for us. Surveillance is up ahead. This is Bloomberg.